Now in 12.15, this is one of the more complex documents that we will deal with in Review Plus. If you are familiar with one of our audit methodologies, either RAC or Audit Lite Plus, the layout will seem fairly familiar. What we're trying to do here is we want to identify all the material components within the entity that we will need to review, because the standard tells us that we have to review material items. And so for each line item, once again, we try and pull in detail of the balances that we have, in this case under revenue. We have the opportunity to decide which materiality base to apply to this component. So we could now go and say, well, let's apply total revenues rather than our overall materiality, if you have, for instance, gone and designed specific materiality for one of your sections. Based on that, if it's blank, it will default to overall materiality. And we now automatically go and see, well, is that balance quantitatively material? If it's quantitatively material, we've got to design additional procedures. If it's not quantitatively material, we need to decide if it is qualitatively material. Now, something like investment income, other income, might be zero balances, and we can just simply ignore them. We know that it's zero, we know that there's not going to be a problem. So I'm not even going to mark that it's qualitatively material. However, if I scroll down a little bit further, there are a couple of examples that I want to go through with you. Let's look at depreciation. Balance is 581,000. My materiality is 4.5 million. Is this quantitatively material? Definitely not. Now have a look here. There is a line item here, or a column, that talks about an additional review component. Now what we're doing with this additional review component is the review methodology and ISRA 2400, as I say, looks for firstly material items and items where we are suspecting or there's a likelihood of misstatement. If I go and say that depreciation is qualitatively material, and my justification for that is that if I don't review depreciation, I can't really review property, plant, and equipment as a whole very effectively. So I say it's qualitatively material, it's material, I need to do procedures. However, if I don't feel that it is qualitatively material and it has a balance, we're saying, well, let's consider this as an additional review component, and we're going to do a little analytical on the next sheet, and I'll show that to you in a moment, where we give you the opportunity to right now sign off on this component, say, you know what, we've got enough evidence now, we're happy to say that there is no likelihood of any misstatement, or material misstatement I should say, on this component. We have situations where, for instance, we have tax expense. My balances are zero. I'm expecting some sort of balance to occur here. I have two options. I can say that it is qualitatively material, which is probably quite appropriate in the case of tax expense. And if I say yes, you'll see that the additional review component line clears, and you don't need to worry about completing anything there. Or if I say no, it's not qualitatively material, but I want to make it an additional review component, what happens to those two items is they are carried over to my analytical sheet. Now here are all the items which are not material, qualitatively or quantitatively, and either have a balance or we have identified them as potential areas to consider in our review. Now we say, are we able to conclude that the balance is not likely to be misstated? Now we've put these variances in here as percentage change. When we're looking at 1205, our prelim analytical, we've not necessarily broken it down to the same components as we do when we start looking at components in 12.15. So the reason that we have these balances sitting here again is sometimes those percentages and groupings are different from 12.05. So we just want to confirm, are we happy that depreciation will not be, or it's not likely to be materially misstated? If I say yes, give some reference either here or comment or document, whatever the case might be. However, if I was to go to tax expense and I say, listen, I'm worried that this might be misstated, I'm going to say no. I don't necessarily have to document anything, but what is the matter now that's going to get carried through to say this is likely to be misstated? So tax is not calculated by the client, so I now need to go and perform more work on this item because I believe it is misstated. Next item, cash and cash equivalents. If you get to this point and you've got cash and cash equivalents here, I should probably consider going back to the components sheet, finding cash and cash equivalents, and I want to mark that as qualitatively material. Pretty important balance, and as soon as I do that, I go back to the analytical sheet and it's no longer visible on this working paper. Okay, so in summary, what we're trying to do up to this point in 12.15 is identify material components, both quantitatively and qualitatively. Then those items that have balance or look suspicious to us, we say, well, let's go and perform one little analytical review to go and decide whether or not there is a likelihood that this line item is going to be misstated. That's this analytical procedure. If I have a positive response here, depreciation, do I need to include this based on what we call the primary analytical review? No, we don't. But taxation, yes, we are going to review taxation because we're saying that we're not yet satisfied that we can conclude that this balance is not misstated. We then also give you the opportunity to go and document estimates, and what we will do is those estimates will appear on the relevant audit program just to jog your memory and ensure that any procedures that you design actually do consider potential estimates in the cycle. Right, once we have designed or decided what components we're going to review, we go and allocate them to cycles. So this will go and auto-populate as much as possible cycles, but you can go and modify this. Let's say, for instance, you want to review cost of sales with inventory rather than with trade and other payables. Simply using the drop-downs, delete, you can go and edit that as you wish. Okay. So at the end of the day, though, let me just go and delete other expenses. Please have a look here. It's telling me that not all components have been allocated to a cycle. That means I'm missing stuff. My audit programs, my review programs will not be complete. I need to go and ensure that everything is allocated to a cycle, and that's then going to start designing my review programs for me. The materiality is expressed here just as for basically your information, so that you don't need to jump back to 12.00 to check your materiality if you're unsure about whether or not you should use overall materiality or one of the specific materialities you may have calculated. Alright folks, it's one of the more complex documents. Two more things just to highlight on it, and then we're done with 12.50. Firstly, estimates. We have gone and put a whole lot of potential estimates in place for you, but if you feel that there are estimates that we're missing, simply say yes. It'll change the structure of the working paper and give you more lines to go and include more estimates for each component. And when you're done, you can go and hide it again with that. And then secondly, again, if you're familiar with RAC, we have the ability to summarize your cycles. So instead of trade and other receivables, borrowings, equity, bank and cash, trade and other receivables, all as separate cycles, which would be result in separate review programs, you can go and say, no, look, I'm going to summarize it, and then my cycles will be broken down into items on my statement of financial performance and items on my statement of comprehensive income. If we have too many, they're not going to fit in here. You will need to go and adjust how it's laid out and include other items in here where necessary. But that selection here is just to go and summarize it, and then you'll end up with fewer review programs to work through. The same number of procedures may still be required, but at least it's all together on one working paper and easier to follow, especially in very small engagements.